Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Tuesday, the 25th of August, 2015. Hope you're having a good trading week. It's been a fun run for us the last week or so. Pretty much a really high win ratio. A little bit of a volatile market, obviously, and you got to be careful with that. You're not here to try to, a lot of people think you're supposed to try to catch every wildest swing possible, but it really doesn't work like that from a trading perspective. Usually, if you do that, you're having to show so much risk to get on board that you're going to blow yourself up. But we're focused on market direction and finding trade setups that go in that direction. And we had a nice run again on Monday, mostly on the long side, but one short in the afternoon as well in Tesla, and cannot complain compared to what everybody else must be going through out there in the world today. So here it is, the ES front month futures contract daily chart, down from 2100 to a low of 1830 in 5 sessions. That is an abrupt drop off, of course. It's taken us well under the lows from January and December. Obviously down for the year. Obviously this is driven by information out of China and the fact that oil is now down at under $40 a barrel doesn't help. The dollar now getting hurt as well. It's very important to point out this is a cross asset class. This isn't like a flash crash or any of these other things. This is a major deterioration across the board in everything, and it is a big deal. I don't think anybody should assume we're close to a low. Obviously, that doesn't mean every day is going to be straight down like the last couple. We can pause, but maybe get some bounce days in there at some point in time. But I would not assume, and I'll show you why here in a second in particular, that we're anywhere near a low. Let's switch to the monthly chart, and let's let the secret tool paint itself. And we've talked about this a million times, that we got this sell signal, the 13 sell signal, back in October of last year when we made that high at that time. And with the sell signal comes the pink risk line, and that's the sort of wall from the signal. And you can see how we've spent this whole year, essentially, starting in February in particular, right up to that pink risk line in March, April, May, June, July. You can get a tail part of the month, in this case, above the pink line, but you have to close above that and then head higher to really bust the line. And we have not closed above it. And so with that, we were basically just running into that wall and hitting our heads over and over and over again. And we've talked about it many times this year, how this is exactly how a top forms. And obviously, if you get this signal on a daily chart, then we're talking about 8 days later, and there we go. But this was on a monthly chart, and so it's okay for it to take 8 months. It's only 8 candles for it to sort of form the top and roll over. But I think what's important is the signal worked exactly, very technically, and with it comes, unfortunately, where's your downside target from here? Because when you really look at where we're at here on the monthly chart, and you look at where we've come since the beginning of 2009 at the bottom, this little blip that we've had so far this month is not anything. It's not significant to the move that we had up. And, you can see that there's a lot of support down near just under 1600 on the ES, which is still another 300 points lower. And I think at a minimum, retesting that would make a lot of sense. Matter of fact, if you retested that and then turned back up, you'd probably be ready for the next big bull run in history. The other possibility is the red line. That's at 1325 or so. That's the static trend line of this current move that gave us the signal. There's a couple ways the signal wears off. We'll be talking about that over time, I'm sure. One of them is if we get to that red line, that will be the end of the signal. The other one is if we form a new 9-bar startup phase to the downside. And wherever that gets us, that's sort of the end of the signal having to play out. Very common to see one of the two happen once you've started the rollover process. So I think the key is, people were asking me today, was this capitulation? And let's move to talk about, let's go through the indices real quick, and then we'll go talk about that. So here's the S&P cash, closed down 77.5 points today. Here's the NDX, NASDAQ 100, closed down 158, well off the lows, was sharply lower earlier. That's the lower part of the candle there. On this one, had about a 700-point swing in a couple of days. SOX is down 12. And this is near the lows from last October. That's a nice, by the way, a nice inverted cup formation for a potential real breakdown here on the SOX. Biotech's down 110, gapped under that static trend line that now, see, here's what we're talking about, right? And this is a little different because it broke the risk line in this case. But look at that 13 sell signal back in June on this daily chart. We broke the risk line there. And even with that, eventually came over and we tagged the red line. So that's the target on the downside. Google lost about 26 points. And that's actually still up quite a bit off the low, almost 20 points off the low. Apple had made it back to green today at one point in time after gapping under 100. But still closed down 2.5 points at 103 and change, 103.12, I guess. The VIX got above 50. Remember, the key point for the VIX is when you get above that 40 area or so. And we did get above 50 at one point today. We got to close above 40. So that's maybe good for a one-day pause at some point in time, but that does not mean this is the end by any stretch of the imagination. And then crude oil rebounded a little bit, but closed at 38.25. So we talked about, can crude oil close under 40? It's finally done it. Gold down $4.60. And the trend closed at 195, which is not a huge deal. Brings the 10-day moving average, though, up to 1.43. Doesn't usually get above about 1.5. Here's the advanced decline ratio. Another one. Ugliest day so far. 2,500 stocks on the NASDAQ, more down than up for the session. And NASDAQ volume, 3.2 billion shares. Better than Friday's options expiration. So this was a more meaningful thing from that perspective. Now, let's take a look at the 5-minute chart of the ES and just talk about what happened today. People are asking me, did we get the capitulation today? Let's talk about what capitulation means. Capitulation is when everybody's just selling. There's nobody left to buy. Everything's just falling apart. Huge, huge, huge damn candles. Usually happens at the end of the day. You can look at Friday and you can see, yeah, we closed at the low a day, but there was nothing capitulative about it. And then what do you talk about for today, Monday? We gapped down. We spent about 5 or 10 minutes maybe trying to head lower. The NASDAQ side actually froze because we hit the 7% limit in the market. And then we bounced from there. And matter of fact, by lunch, we were 75, 80% of the way back to being even for the day. It's a big move up. You have to remember that means there's more buyers during the session, not sellers, buyers. Then we roll over coming out of lunch. That's just a standard pullback after that big move up. And then in the afternoon, we did start to head lower, but we rebounded very late. Remember, there's 3 bars here that are after the close of the stock market on futures. And so we kind of rebounded and then had maybe 1 bar down to close out the session. Then we went a little lower after the close. Where is the capitulation in this? There is none. This is not capitulation, not even close. Doesn't mean, of course, that we just keep heading down straight tomorrow. We can have some back and forth days. But if you're looking for the lows in the market, like I said, I think there's a long way to go. This is not it. And this is certainly not a capitulative mood where we could say, maybe we'll flatten out for a week or two at least. Okay. There's nothing positive about what we see here in the markets. And just keep that in mind. We're going to stick to, this is something we haven't had to do for a while because, the year's been fairly stable. But, we don't do a lot of daily chart picks when the market's like this because the odds are one way or the other, up or down, we're going to gap tomorrow morning and it's going to ruin whatever patterns we have. And, we're going to call it from the tape. We're going to make sure we've got good, clean market directional support and find some setups, whether they be intraday setups or maybe a little wider. Before we take trades, we're going to be very consistent about our trading. We've had a really good run all last week and today. And 4 out of 5 winners today with market directional support. This is the market directional tool. It's a very important tool. We teach it in our program. And on a day like today, it makes it so easy for you to know if you just accept the tool and the direction it's giving you, which way to take your trades. And in fact, we were long all the trades in the morning and all the way in the afternoon until we had the Tesla short, which was after market direction went red here. If you just stick with that, you're going to do all right, no matter how volatile the market gets. We do have some economic data that's due tomorrow. We did not have any today. We've got the Case-Shiller 20-City Index and the FHFA Housing Price Index at 9 a.m. And then new home sales and consumer confidence 30 minutes into the market. Those can move the market. And we'll be in the lab trying to help you out. Stick with us. We'll try to make you some money in this market. Charts as usual brought to you by eSignal. Have a great trading session.